Daily time frame is one of the most important time frames for market analysis and trading. In this video, I will teach you a simple and profitable swing trading strategy on a daily time frame. You will learn how to execute the analysis properly and how to manage a trading position. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. The first thing that you should always start your analysis with on a daily time frame is the market trend analysis. You should know whether the market is bullish, bearish, or consolidating. In a bullish trend, we will look for a signal to buy. In a bearish trend, we will be selling. And in a consolidating market, we will be waiting. Let's analyze Euro New Zealand pair on a daily time frame, and let's try to find a profitable swing trade here. First, what we're gonna do, we will analyze the market trend. We will try to identify where the market is going. And in order to do that objectively, in order to objectively identify the direction of the market, we will analyze the price action. We will analyze the recent significant price movement, and you can see that what I do, I underline the significant price movements, and I am trying to perceive the price chart as the segments of impulse and retracement legs. With that, we will try to objectively identify the market trend. Traders, last days of big Black Friday sale. Until tomorrow, you can get a lifetime access with a 40% discount, VIP signals included. For more info, check the link in the description below. You can see that first, in August, the market was definitely trading in a bearish trend. The market was bearish because over time, the price managed to update the lower lows multiple times. And at the same time, we can see that the market was also updating the lower highs. So for a quite long period of time, the market was bearish and the market was trading in a bearish trend. Then what is very important for us to notice is that with this strong bullish impulse, the sentiment started to change. With this strong bullish impulse, the market violated the level of the last lower high, and it gave us a very perfect example of a change of character. The change of character signifies that the bearish trend here was violated. We got a confirmed violation of a bearish trend. And after that, you can see that the market updated the high, then we set a higher low and we went higher, setting a new higher high. Clearly, we can see that the market was bearish. The market was trading in a bearish trend, but then the trend was violated. Bearish trend was violated and the market started to trade in a new bullish trend. From a current perspective, Euro New Zealand pair is bullish. It is trading in a bullish trend and we can look for buying opportunities. After you identified the market trend, you should analyze the supports and resistances. It will provide safe points for opening a trading position. In a bullish trend, we will look for buying from a support, and in a bearish trend, we will sell from the resistance. So that we will take only the trend following trades. With our trend analysis, we found out that Euro New Zealand pair is trading in a bullish trend on a daily. After that, what we do, we start analyzing the structures, the supports and resistances. And because the market is bullish, because the market is trading in a bullish trend, our task will be to identify the significant supports, because the supports will provide the safe places for us for buying. In order to identify a significant support, we should analyze the price action, and we should identify the level or the zone that was respected by the market in the past and from where in the past a strong bullish movement initiated. And we can spot easily a very strong support right here. A very strong support that is based on the level of the last higher low in this bullish trend. It is a very strong support here from where a strong bullish wave initiated. And you can see that just recently the market tested that support. We got a test of that support, and now we can look for a signal for confirmation to buy. In a bullish trend, a test of support is a very important condition in this trading strategy. Only when a key support is tested in a bullish trend, we can look for a signal to buy. And in a bearish trend, only after the test of a resistance, we can look for a signal to sell. And before I explain to you how exactly we will look for a signal here, let me again try to explain to you the logic behind buying Euro New Zealand. The thing is that the market is now bullish and it is cheating in a bullish trend. And the recent bearish movement that we saw on the pair for us is the correction. It is the correctional movement, and we assume that after the completion of this correction, the market will start growing again and go up and return back to the levels of at least the current high. And with the high probability, then the market will manage to update the high and set a new higher high. And this support, a key support, can simply be the zone where the correctional movement will complete, where the excess of a local supply will finally be absorbed by demand, and from where buyers will finally start buying the pair, and from where a strong bullish movement will initiate. Then look for a signal. Just the fact that the price tested a support or resistance is not enough to open the trade. We will need a confirmation, something that will confirm our assumptions and predictions. But before we buy Euro New Zealand, before we open a long trade, we will need a confirmation. We will need a signal, because quite often the market easily breaks the key supports, the key resistances, so just the fact of the test of the structure is not enough for us. We need to see a clear sign of strength of the buyers. We need to see the presence of the buyers and the interest of the bulls to push the prices up. And we can rely on the price action and on candlesticks, and it can give us a very reliable confirmation signal. If we analyze how the pair acted recently, we can spot a very peculiar horizontal structure right here. In the past, it was a minor local support, a support from where we saw a nice pullback. Then after the breakout, that minor support turned into resistance, and we saw a clear interest of the sellers in this resistance. From that minor resistance, bearish movement continued. So we may assume that within this yellow area, selling orders are accumulating. We may assume that sellers are selling from that resistance. And in such a case, our bullish signal, our confirmation will simply be the breakout of that resistance. The breakout of that resistance will confirm the strength of the buyers. It will confirm that the buying pressure is stronger than the interest of the sellers within that yellow resistance. And when the daily candle closes above that resistance, it will give us a strong bullish confirmation. And after that, we can look for buying. Then build a trading plan and execute the trade. Identify the exact entry level, realistic target, and a safe stop loss. When a daily candle closes above that yellow resistance, it will turn into support. And that will be the area from where we can buy. That will be the area where it will be safe for us to buy the pair. After the daily candle closes above our resistance, I recommend setting a buy limit order on a retest of a broken structure. And depending on your desired risk to reward ratio, you can either set your buy limit order in the middle of that zone or on the lower boundary of that zone. Your safe stop loss will strictly lie below that daily horizontal structure support. Why? Because according to our analysis, the pair is now bullish. And that support is based on the last higher low in this bullish trend. And if the price starts falling and if the market violates that support, it will also signify the violation of a current bullish trend. The violation of that support will signify that the market returns back to a global bearish trend here. And it will signify that the bullish trend will be over. So with the stop loss lying below that support, we will have a very safe trading position. We will close the trade in a loss only when that entire bullish trend will be violated. Then, concerning the target, where will be the realistic safe target for the trade? Because the market is bullish, because we are trading in a bullish trend, we can anticipate that at least the price will manage to retest the current highs. And the resistance cluster based on the current highs will be our perfect target for the trade. If you believe, though, that the pair may go higher, that the market will update the high and set a new higher high, then you can aim at the next strong resistance. You should look left at structure and identify the next strong resistance. And it can either be your only target, or, as I always recommend to my students, it will be better to have two targets for the trade, and your second target will be that structure. And now let's discuss some trade management tips. If you decide to trade this trade with one single target, you simply open the trade on a retest and you keep holding the trade till the target or the stop loss is reached. But if you decide to trade this trading setup with two targets, then after the market reaches the first target, you close half of your trade and you also take your stop loss and move it to entry. You make your position risk-free. That is how we manage the trades with two targets. Following this trading strategy, you can effectively trade any Forex pair or any other trading instrument. Just make sure that you execute a proper market analysis before you open the trade. Let me know, traders, in the comment section if you have any questions. Also, traders, do not forget about Big Black Friday sale. Until tomorrow, you can get a lifetime access with the 40% discount, VIP signals included. For more info, visit my website, the link in the description below. Also, traders, please watch my other videos.